Hi, today's my concept is scope of investment. Let me start with the first point, the safety of principal. The most basic investment objective is the safety and security of the principal. That is one of the main objective of investment. So before taking any investment decision, you have to keep in your mind that whether your principal amount is safe. So that is the first priority. Then the second priority is the return. So while you are assessing the risk pattern also, you have to assess it from the viewpoint of principal. Means just first importance is safety for the principal, then giving the importance for the return. So therefore safety of the principal is a plays major role in case of investment, and there are a lot of investment avenues. There are a lot of investment scopes also for to give the safety for a principal amount, like in case of bank divisions, means investment in banking sector like opening FD or RD account or other bank schemes that provide safety to the principal, or schemes of the postal departments also. The different schemes of the postal department will also provide the safety of the principal. And see, this safety of principal is vary from avenue to avenues, one schemes to another scheme, and that you have to select, you have to find out where there is a high scope for principal from the viewpoint of safety of principal. So when you go for the gambling sector, that the risk is more, therefore the safety for the principal is also less. So that's why the safety of the principal, it is vary from avenue to avenue. The next point is the safety stability of income. So that's it. How to make stable income, the stability of income, how to make the stable income, it means how to get regular income. So generation of regular income or creation of regular income is based on your selection of investment. Again, there are a lot of investment avenues which gives the regular income, stabilized income, like FD, bank FDs, which gives the stabilized income, or LICs that gives the stabilized income, and even in the different schemes in mutual funds that also provide stabilized income. Even in case of postal schemes, that will also provide stabilized income. The different scheme, either RD in case of postal department or RD in banks or in other sectors also, that will give you stabilized income. Stability of income means regularity in income, and that stable income continuation, that every time you are getting that same return, so that is called as a stabilized income. And there are a lot of investment avenues which provide again the stabilized income, but you have to select based on the risk factor, and it is the duty of the investor to select the particular investment avenue where there is a stability of income, because intention is to get the good return to increase the value of the principal or the capital appreciation is a main one. So whenever there is a stability of income, automatically there will be appreciation in a capital. So there is a scope for to get stabilized income in case of investment. Again, selection is based or selection is dependent on the investor. Definitely there is a stabilized or the some investment avenues which provide the stable income to the investors. Next point is liquidity and collateral value. So when you study from the investment point of view, liquidity means investment that can be easily bought or sold are said to be liquid, while the inverse is true for illiquid assets. Investment that can be easily bought or sold are said to be liquid, while the inverse is true for illiquid investment. Means, what is liquidity in case of investment? The investment avenue which can be easily converted into cash is called as a liquid investments. All the investments cannot be easily converted into cash, so therefore such type of investments are called as illiquid investments. Buying and selling are easy, then liquidity is a high, so that is called as a liquidity in case of investment. There is again your intention is to, if it is a long term investment getting return in the long term, you does not want it for the short term period, and you don't want to sell it in the short term period, then you have to go for the illiquid investments. And if you want it return in the short term duration, or if you want it, sell it immediately, and while selling it immediately, then you need the cash in spot itself, then you have to select liquid investments. Like in case of trading in the stock market, there are a lot of options: day trading, or equity trading, or derivatives, or commodities. There are a lot of divisions, and there the liquidity is generally some markets, some stock market means some division of the stock market that provide the liquidity is high. Like in case of intraday trading, day trading, in case of stock market, that provide liquidity is generally high. So that's called as a liquidity. So you need the fund immediate, you need the cash immediate. So therefore you have to purchase such asset which provide cash immediately. So which can, by selling such assets, you can sell, you can get the cash immediately. So that is called as a liquidity. Of course, there are a lot of investment avenues which provide liquidity or liquid investments avenues, as well as illiquid investments avenues. Like if you bought the land and if you want to sell it today, then it is not easy, because you have to find out the buyer. Then only means at your price there is a need of buyer, there is a need of purchaser, then only you can take the decision of selling. And the buyer won't pay the cash immediately, full amount is not possible. It needs some time to take the settlement in case of selling of land, even in case of selling of gold, also any other fixed assets, it requires some more time, because you have to, in some case of investment, you have to find out the buyer, the person who is ready to buy that particular asset at your price. So then it is called as a, they are all illiquid investments. When you go for in case of day trading, in case of stock market, you can buy and sell immediately. There is no you can immediately can encash it. It means immediately you can sell it in the stock market and you can get the cash. And there also there is a settlement, a 1 day settlement, so you cannot withdraw it immediately. When you go for the FD, if you have the FD in the bank and if you want to encash it, then you can visit the bank and you can surrender the bank FD and you can get the cash immediately. So there the liquidity is high. And if you want to encash the RD before due date, then immediately you can close it. So then also there you will get the cash immediately. So that the liquidity is high. So that's called as a liquid investment. So when you go for the investment avenues, there are liquid investment schemes as well as the illiquid investment schemes. Then you have to select it based on your financial requirements. So you have to keep in your mind that whether the cash is required you for immediate or for long term. Next, another point in that collateral value in investments. Collateral value refers to the amount of assets that have been put up to secure a loan. The amount of assets that have been put up to secure a loan. So that is called as a collateral value. Flips in another way you can say like pledging. See here one chart has been given, one picture has been given about the collateral. You want loan from the bank, then you have to collateral your housing documents with the bank, then the bank will give the loan to you. So that is called as a collateral. There are a lot of use of collateral. It differs from investment to investment. So there is a lot of concept related to collateral. Here it is just remember it is the amount of assets that have been put up to secure a loan. While you are borrowing the loan from bank and you have to pledge some assets. If you are pledged your housing documents or land documents or any other documents, by pledging any documents, if you have borrowed the loan, then it is called as a collateral. Or by pledging the gold, if you borrow the loan, then gold is considered as a collateral asset. So that's called as a collateral value. It is there in case of investment. So again it depends on your requirement, investor requirement. So that's about liquidity and collateral value. Next is the purchasing power. Purchasing power is the amount of goods and services that can be purchased with a unit of currency. The financial ability to buy products and services. The purchasing power means your capacity to buy a particular asset. The amount or money which you have and to buy the particular asset, that is called as your purchasing power. So purchasing power is the amount of goods and services that can be purchased with a unit of currency. For by 100 rupees, how many assets you can buy? So that decides the purchasing power, and that will vary from every day or depends on the economic environments. If there is a high inflation or rate of high inflation is increasing, then purchasing power will reduce. So that is it means it reduction in case of your surplus, reduction in case of savings. So when one other side, the cost of the product will increase, so that the purchasing power will reduce whenever there is a inflation. So investment will help you to increase your purchasing power, means you're saving some amount, you're saving some your earnings, or you're increasing your surplus with the intention to, your intention is in the future whenever it is not possible to purchase any particular product, that to meet these savings will help you, or these investments will help you in the future whenever your purchasing power is reduced. So at that time you can utilize these investments, either land or gold or any FDs or even in the securities. They can utilize it by you in the future whenever there is a high purchasing power. High purchasing power means purchase rate of purchasing power is increased, or so your surplus or from your savings or from your earnings, if you find it difficult to meet some expenses, then you can utilize these investment schemes. So that is called as the financial ability to buy products and services for an investor is called as a purchasing power. And next point is adequacy of income after tax. So that also you have to check while you are taking the decision of investment. There are a lot of investment avenues which provide a lot of return, good return after deducting the tax, or some investment avenues which won't carry any rate of tax. So adequacy of after tax, adequacy of income after tax, you have to keep in your mind while you are selecting the particular investment avenues. Next is the capital growth. Capital growth or capital appreciation is an increase in the value of an asset or investment over time. So that is called as a capital growth. Simple words, increase in the value of your investment is called as a capital growth. If you are invested 10,000 today and after 1 year if it increases to 11,000, then it is called as a capital growth. So appreciation in the value of assets over a time, it is called as a capital growth. So you have to again find out that particular investment schemes. Of course, every investor intention is to increase the value of an asset in the future, but all the investment avenues does not carry such features. It depends on some investment schemes dependent on market, there the capital value may reduce and some investment schemes may increase. So again it entirely depends on economic conditions. So you have to study it and then you have to take the decision of investment which will help you to increase your capital in the future. Next is a legality. An investment allowed for institutional investors under the legal and irregular rules of the country in which it is made. Here, legality means all the investment avenues right now are legal in India. Illegal investment avenues are not permitted, are not to be traded, or there are no illegal investment avenues. When you go for a bank FD, there is a legal provision, safety, there are a lot of conditions, safety for the investor. Legality means here how the investment avenues provide safety to the investors. Like if you are depositing the amount in the scheduled banks or some commercial banks, it is a safe because they follow the RBI guidelines, or RBI monitors their transactions. So they will protect the interest of the investors. When you go for the bank FDs, who will protect the interest of the investor? The RBI will take the measurement to take the protection of the protect the interest of the investors. Or when you go for the stock market, the SEBI will protect the interest of the investors, or even the NSE or BSE, the stock exchanges will protect the interest of the investors. So because all goes as per the legal provisions, or they will follow the corporate governance. So therefore they are all considered as a legality. There is no illegality in case of when you go for of course there in case when you go for the gambling or when you invested in undisclosed sources, whenever you want to hide your investment avenues or investment schemes, then definitely there is a no legal coverage, like investment through chit funds or hundis or any other type of illegal activities. Whenever you invest in unorganized sector, then there is a no safety or no legal provisions to the investors. There is no person, no body to protect the interest of the investors. So that's all about the scope of investment. Thank you very much.